Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today I'm going to talk about when submitting your self-assessment tax return, if you need to declare information on income that has already been taxed. Before I do that, if I could please ask, if you are new here, please could you take a moment to subscribe to our YouTube channel? That way you can easily refer back to this information if you should need to, as well as being able to access other information that we have on a whole host of different topics, all aimed at supporting you in your self-employment. And if you navigate to the playlist section of our YouTube channel, you will find the topics loosely catalogued to help you find the information that's going to be most relevant to you. If you turn on the notifications, you'll be notified when we upload new information. And if you find the information useful, please do take a moment to like the video as well. This helps us to understand which topics are most useful and which to concentrate our time on the basis that they will be supporting more people. So back then to submitting your self-assessment tax return and whether you need to include information on income that's already been taxed. So if, for example, you have more than one source of income and you are, say, for example, a sole trader having to declare your self-employed profits to HMRC in order to calculate your tax liability. And then the specific question is if there is some information on some income that has been taxed at source, does that need to be included and why does that need to be included? So the first thing to answer that question is that your self-assessment tax return, there's various different reasons why somebody may be obliged to submit a tax return, or that they may simply want to submit a self-assessment tax return. But whatever the reason, the self-assessment tax return is a return on all of your income across all different sources. And if you have an income source where it's been taxed at source, perhaps you are a sole trader and an employee, then any tax that has been deducted at source will also be factored into your calculation. So please don't worry that you will be paying tax on the income twice. But one of the main reasons why it's necessary is that our tax system in the UK is what's known as cumulative. And what that means is that each separate source of income isn't taxed in isolation to all the other sources of income. All of your income across all different sources for income tax purposes is added together, and that income determines your liability. So it could be, for example, that as a sole trader, your profits are below the personal allowance. And as an employee, your income is below the personal allowance. But when you combine the two, they take you above the allowance. So it's important for your tax calculation to be correct, that all of the income is included. So what will happen is we're going to detail all the different income from all of the sources, and then that's all going to be pulled together, which is going to determine which different thresholds you get to, which different tax bands, which is going to determine predominantly the rate of tax that you're going to pay. But then we're also going to be declaring any tax that's been deducted at source. So once your total liability for the year is calculated, then off of that is going to come any tax that has been deducted at source. And of course, sometimes that may have resulted in an overpayment, because it may be that the other information wasn't available. So if you're a sole trader, for example, and an employee too, it may be that your tax code doesn't take into account any of your self-employed profits, or perhaps it does. We've got other videos that explain how the tax codes work. But ultimately, what we're trying to achieve in the self-assessment tax return is to declare all of your income that's subject to income tax from all different sources to get your total income for the year, and that will be used to calculate your liability. And then, as I mentioned previously, any tax that you have had deducted at source will be deducted from that liability. So you're not going to be taxed again. Any tax that has been deducted will be taken into account. It may not be that the tax deducted was the exact liability on that tax, because of the nature of how the tax codes work and the complexities involved if you have different income from multiple sources. So the answer to the question is yes, you must declare all income from all sources. So just because the income's been taxed at source doesn't mean that you don't include it. It could be, for example, that income pushed you into that's been already had tax deducted, pushed you into high rate tax, and so by not including it on your tax return would mean that your calculation would only calculate at 20% tax. And of course, once that self-assessment tax return is submitted to HMRC, then they will see a mismatch and they will see that information hasn't been included, and they will reissue a calculation. And of course, what we're actually aiming to do is to make sure that we are submitting an accurate return to HMRC. If you're a sole trader, then we want accurate accounts, accurate profit reported. If you had income deducted that's been taxed at source, we want accurate information from a P60 or a P45. And if that isn't available, then you can, for income that's been taxed at source, you can, if you have a personal tax account on gov.uk, you'll be able to get the information from there. So of course, if you aren't declaring all of the information correctly, then of course this is going to be a warning to HMRC that, well, if you're making simple errors by missing a whole source of income from your self-assessment tax return, what other errors may be made. So we want to make sure that our income is completely accurate, and even if it doesn't incur a tax liability, for example, if you've received some interest that's under your personal savings allowance, it's still good practice to include that in there, because it does show that you have looked at all your income streams. So hopefully that this helps explain that you do need to include all the sources, and helps you to give an overview of why this is important. Thank you very much for watching. If you haven't already, please do subscribe to the channel. Thank you. Goodbye.